Welcome to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So let's get started. Good morning, Navigation Traders. It is Monday, February 5th, a few minutes before the market opens. And if you haven't connected with us on Facebook or YouTube or Twitter, make sure you do so. That's where we make all of our major announcements, upcoming courses released, events going on, contests, all that good stuff. So make sure you connect with us. By the way, I upgraded my software yesterday for the software that I use to broadcast. So from time to time, you're going to be getting a kind of a watermark across your screen showing Wirecast, which is the actual software. Apologize for that. I am not sure how to get rid of it yet, but I'll work on that after the broadcast here, and hopefully next week it won't be there. So just a little FYI. Anyway, just as a reminder, this broadcast is all about you. So if you have any suggestions or topics or things that you want me to cover, post them here in the comments. We stream live from Facebook and YouTube simultaneously, or you can always drop us an email at info@navigationtrading.com. But before we go to the platform, we've got a few minutes before the markets open. Just wanted to make you aware, we just posted our trade results, our closed trades for the month of January. Another great month of trading. As you can see here, if you scroll down, we closed 12 trades, 11 of which were winners. We had the one loser, which was a calendar spread in SPX. We did some short put verticals. Excuse me, suffering from a little stuffy nose this morning, but short put verticals, short strangle, butterfly, a pre-earnings long strangle, post-earnings short put vertical, long put vertical, the calendar spread I mentioned, post-earnings short put vertical, an earnings short strangle, and some pre-earnings long call. So obviously right in the mix of earnings season, so a lot of the trades here were earnings trades, but we've got a really good portfolio in place with our core strategies as well. And if we go to the platform, the bell has not rung yet, but we can take a look at just some of our current positions. We've got the Euro /6E. We've got /ES, which is the E-mini S&P 500 futures. Nat gas, the 10-year note, soybeans, wheat. We've got the Dow. We've got the Mexican ETF. We've got the Brazilian ETF. We've got FXI, which is the Chinese large cap ETF. GLD, which is gold. Position on an IBM stock. IWM, which is the small caps. We've got an earnings play on an NVIDIA. We've got a position on in the NASDAQ, in Tesla, in utilities, in healthcare, and retail. So we've got a really, I love how we're positioned here with our portfolio. And holy moly, I'm clicked on the S&P right now. I mean, what a difference a week makes, right?
This is a demonstration.
I mean, we've been,
Wirecast.
If you've been following Navigation Trading for any period of time, you know that we like to keep short delta in our portfolio. We like to have a short bias for protection, because as premium sellers, you've got to have that downside protection. Well, when the market just continues to grind and then explode higher, that's going to cause a drag on the performance of our portfolio. And so, I mean, what a relief this little bit of dip here has been on our portfolio, and has really made a huge difference, not only from the current positions that we have on, but when the market does this, you get a spike in implied volatility, which really gives opportunity to put on new positions. And so This is when trading really gets fun. There's the opening bell. This is when trading really gets fun, when you get this two-sided action. You know, when you get this one-directional, just massive move in one direction. That's very hard to defend and hard to battle. Now, we've done a really good job. We haven't done anything stupid. We haven't continued to add short positions. We've just continued to manage and roll and adjust mechanically. And now we're seeing some downside, which is really helping. And you know, who knows? This thing could turn around and rip back higher, or it could, you know, this could be the beginning of a decent little sell-off. You know, the S&P was down over 60 points on Friday. The Dow was down about 700 points. And now we're seeing a continuation where the S&P is down another 21. At this time, the Dow is down another 245. So, you know, who knows what's going to happen, but you know, as premium sellers, as traders, volatility is good. So two-sided action is what we're looking for. So let's take a quick rundown of the markets. Take a look at what's going on here. I mentioned the indexes. Nasdaq also down in 55. Oil down about 1%. You can see VIX futures popping up. And take a look. And so we're looking at the ones with 39 days to expiration. And I'm gonna first enter a strangle here, using about the 18 delta on the call side. So if we sell a strangle, and then on the put side, look at about the 20 delta, which would be the 32 strike, and take a look at that. Let's go ahead and analyze that. Looks like we're collecting about 87 cents, about $87 per contract as your max profit. And with stocks or ETFs with this low of a price, so we've got it's trading at about $35. You really don't necessarily want to do an iron condor here, because if you buy the wings, in fact, let me just put that up here so you see what I'm saying. So if we sold an iron condor, and probably make the strikes, let's just try it at 2 points wide. We can adjust that if needed. On the put side, we'll do the 32, sell the 32, and buy the 30 for protection. And so here's the problem with doing the iron condor is you're only collecting 47 cents of credit. So max profit of $47 with a buying capital of 153. So that's over 3 times. So I don't like the risk reward, and the fact that you're only collecting 47 cents, so you have a max profit of $47 per contract. You know, with an iron condor, that's a 4-legged spread. So you've got transaction costs too. So that's why on these lower priced contracts, unless you're going to go much more narrow, like to do a butterfly, where you have a much more narrow range, which would be a viable strategy on this trade, you know, I would probably opt for undefined risk. Collect more credit, got a higher probability of success, and it's easy to manage. So that's what I'm looking at here for XOP, and I'm going to work this order, and if I do get filled, I will shoot it out to pro members. If you are not a current pro member and you would like to start receiving our alerts, you can always go to NavigationTrading.com, click on the big orange button that says Pro Trial, and you can test it out for 2 weeks for just 14 bucks. So hope that was helpful. Hope everybody has a great week of trading. Looking forward to this two-sided action that we're starting to get. And we'll talk to you next week. Have a good week, everybody.